Good morning, everyone. Good morning, good morning. Thanks for joining us for Monday the 6th. I appreciate all your kind words while I was sick. I tell you, I've been waiting for this little surgery for rapid heartbeat. It's what they call a catheter ablation. And while I was waiting, I caught an infection. I caught a pretty bad cold. And that's kind of hear me sound like that. And while I was at the hospital, at the heart clinic, getting tested for the upcoming surgery, I went into this arrhythmia and they freaked out. Next thing you know, they're wheeling me to emergency. I'm like, no, no, listen, this happens all the time. Anyway, they kept me overnight, and when my girlfriend found out, she had a bit of a fit, so made me take a couple of days off. I appreciate you guys keeping the room going while I was sick. I've still got a pretty bad cold. So what I'm going to do is, usually I do an hour and a half on these sessions. What I'll do is I'll kind of go for as long as I can. And if the old ticker starts going into arrhythmia, I'll let you guys know and then I'll go chill out. For my coaching students, hopefully I should be back to normal tomorrow. And start resuming back to work. Kind of lucky that it happened over the Easter long weekend too, so saved a bit of time. It's funny you say that, Stuart. When I had my first heart attack in 2012, well, my only heart attack, they they're like looking at me going, "You're 44 years old. How come you're in here? You're not crazy overweight." And I'm like, "Well, I'm a trader. We age in dog years. So 1 year as a trader, especially when you're doing deals, is like 7 years for normal people." Yeah. So let's get to work and see what we're looking at. It is, of course, we are in uncertain times. We have a war going. And I guess we have an ultimatum or something tomorrow. The markets are going to be trading a little nervous, so let's make sure that we keep things in focus. Going to take a look at on the weekly here. We are, trading between 63.64 and 66.58. Our high today is 51. Our low is 65.67. So we're at the upper end of this. We still, on a weekly chart, have a lot of inventory that's trapped above us. I'm kind of anticipating a little bit of this. I was really thinking that we were going to come and break 6,000, but who knows? It's a brand new month. Let's see what happens. That's the weekly. Let's go to the daily. There's that 63.64 area again. It's a huge chunk of volume down here at 62.20. So if we break these levels, that's where I'd be looking for support because we always come back to position. And, do we get back under 66.21? We're at 22 right now. So the levels are working. Let's just see, what happens. We are going to have sellers here. We're going to have sellers at 66.86 when we get back up there. And then up here at 67.49. But That's a little bit of a long ways away. I think we're going to work this area out. That's our swing low, right? So yeah, we had a margin increase from AMP, and now I think, is it back to normal? Let's see. Margins have been restored back to day trading. AMP is kind of like our canary in the coal mine. So back to $40 to day trade a micro and 400 for a mini. I have not taken a trade since last week. So actually I'm going to open up the old trading account here and kind of dip my toe back into it very, very slowly. So we're back, we're back to normal stuff here. Overnight inventory was short. It was short. We came down into these single prints from Thursday. They did some short covering, and the market picked up, you know, picked up its pants and ran back up here. Overnight inventory is now long, but what I'm thinking is because Thursday's range was so big, I think we're just going to stay back and forth until the news comes. If we get a breakout, if you get acceptance for larger traders who are looking for this, remember that you have to get acceptance over 66.56. And then I would say the 4 6s and then 66.76. That's really your levels that you're going to be looking at. Being that it's Monday, it is a holiday in the UK and in other places, we might not get that oomph that you're looking for. So manage your expectations. There might be just some nice back and forth trading. The order books are going to be thin. Now, what does that mean? That means that there's not a lot of people who are committing capital, right? If you look and see, there's a lot of the hedge funds. They've had a horrible, horrible first quarter with this war. So, if you look at the order book now, it's 20s and 30s every tick, right? Which means 20 and 30 contracts for cushion. There's no hundreds and 200s and 300s. It's not a thick order book. Also, we have a very fast market, and what that means is if I came in and dropped a 500 contract buy or sell order and started hitting these bids in a sell order, those bids would disappear very quickly. That's why you get the big candles, So somebody asked me, what do the market makers do? Well, what they do is they don't want to spend money. So if a big order comes in here, the order book will thin out and price will drop quite quickly. The analogy is if you have a small pond of water and you drop a really big rock into it, it's going to displace a lot of water, right? But if you have a very big pool of water, that rock is not going to displace as much. Same thing here. You're going to have moves like this. You're going to have big green candles that are short covering candles, big red candles that are liquidation candles. Get used to that. What does that mean, JJ? That's great. You can explain this stuff, but what does it mean in a practical way? How does that affect how I do business? Do you guys, everything that people ask you or talk to you in a market, your question to them, right? Any trading mentor, any trading, anybody who's trying to give you advice on how to trade, on markets and things like that, what you have to ask them is, how does it affect how I do business? Right? That's the first question. Second question is, okay, that's great. You told me this. How does it affect how I do business? Well, you got to be careful. What are the practical steps, right? What are the practical step-by-step instructions to change how I do business to either, number one, you should always be thinking protect yourself. And the second thing is, how do you benefit? You shouldn't be thinking how you benefit first. That's how greedy people lose all their money. Smart money always thinks, how do I protect myself? Okay, great. Now I know how to protect myself. How do you protect yourself? Well, number one, you don't take dumbass trades. Okay? You don't take dumbass esoteric trades, right? Exactly, Sadiq. Right? You take common sense trades at an edge if you're a new trader. Number two, you don't try and trade like a fund manager with $100 billion in assets under management with a $2,000 account. Okay? So you're not trying to capture 30-point moves. Right? What you're trying to do is capture a couple of points here, a couple of points there. Trust me, it adds up. If you make $200 to $300 per trade, and you do two or three of those trades, and you do that every day, it adds up. Right? The number three thing is, and you guys aren't going to like this. Everybody hates this, right? If you are up money in this market, right? If you're up, say you're up 500 bucks. If you lose $50, if you lose 10% of your winnings, you should give your head a shake. Personally, myself, if I'm down 10%, if I make $1,000 and I lose 100, I stop trading. Take a little bit of a break, right? Take a little bit of a break and assess whether or not you're starting to overtrade, all of that stuff. Because if you do that, you'll be able to manage your business intelligently. Okay? Be aware of these things, right? A lot of people don't have, okay, I'm going to make this much. If I make this much and I lose this much, I stop trading. A lot of people don't have that, right? That's why there's a lot of traders who will be up, oh, I was up $2,000 and then I gave it all back. And then I lost another two. That's because they don't have any business sense. And they get caught up in a loop. They start becoming like a dog chasing their tail. You don't want that. Okay? So let's go take a look and see. So those are the practical aspects of this. Right? I've been away last week quite a bit. I wasn't watching the screens. So I'm kind of getting back into it this week. Let's see where. Off the open, what are we looking for, right? Inventory's long. Inventory's long because the point of control, time-wise and volume-wise, are above the close. That means we're looking for a move down. We already adjusted inventory in the last half hour down to 66.20. So if you are a short seller, right, a break of 66.20 is going to be crucial for you, and then we're going to have to get accepted underneath VWAP. We are in distribution right now. For those of you who don't know what that means, you need to go work at a fruit stand, buy and sell stuff. Because you have inventory taken in here, sold, comes back down, does not come back. This is the cost basis. Distribution all night. Really nice distribution. So when we run out of buyers, and eventually we do, because these markets are back and forth, if you get a break and we stay under VWAP, if we get accepted under 66.15, and especially under 66.09, you'll be looking for 65.96 and 65.89. To the upside, we have sellers right here at 36.37. There's a standard deviation there. That does make sense, right? So we're really choppy here. I like to trade from the edge. I like when the market looks below, goes from one color back up into another and back up into that color. Go long, you got a place to put your stop, and you sell into strength. Or I like it when the market goes and does a look above and fail like 66.49. You short, you got a place to put your stop. Right, here's your execution. There's your stop, and you can cover. If we open and we chop around between 24 and 29, you have to make the determination is the price action decent enough that we can actually make money? If the price action is crap, wait. Right, that's the beauty of a 23-hour market. Beauty of a 23-hour market is you don't have to trade the open. Right? You don't have to. Right? I see some size coming in on the bids now. They're trying to coax that inventory lower. Let's see if we go and get underneath the close at 24. Right? You have to imagine, not imagine. There are people who are long between 24 and 30, right? And they're looking for this. If we start taking out these lows, this inventory will start puking and we'll start looking for lower. Okay? First stop, let's see. The first thing is, do we accept under 24? Right? So if you're a seller here, say you're short 24. Right? Say you're shorting 24. Your danger zone is right here. Say I'm short 23, 24, right? As long as these candles, the tops of them keep moving lower, you know there are going to be some bids down by VWAP. So go put your bids in. If you're short 24, you should have 22, 21, 20 bids in, because they are going to front run VWAP, right? Guys in the room, you guys awake? You're going to have to help me out here. Right? I'm still sick, so you guys are a little back and forth will be good. I know you've been alone for a week. So if you're shorting this area and the next candle opens in 10 seconds and starts lifting above 24 and a half, well, then you know, right? But if the sellers are still there, right? If that seller under 24 half is still there, you're okay. If the seller under 25 and a half is okay, right? But you have to, and you could even add to your short. Like I shorted one at 22 and I added one at 22 and 3/4. Right? And go put your bids in. Do not wait for an excuse or an invitation to cover your short. There you go. See? Nice. Yeah, and if you don't like the price action, like our friend on YouTube said, wait an hour, it'll change. It's just like the weather in Liverpool. If you don't like the weather in Liverpool, wait 20 minutes, half an hour, it'll change. right? And there's the front run of VWAP at right 19 and a half, right? Simple. Real simple, right? Clip in and out, make a couple of points here, a couple of points there. Don't make any boneheaded decisions out of emotion or any of that. It's a fresh month. There's no reason to blow up your trading account right at the beginning of the month. You know, and remember, the golden rule in trading is you find yourself in a trade. And if you find yourself unsure of what to do, just get out of it. If you have forgotten the business reason why you're in the trade, get the heck out of it. Right? There's really only two valid business reasons for being in a trade. There's a lack of supply or too much supply. Honestly, there really isn't anything else. As much as people love to talk crap and they love to baffle you with their bullshit, excuse me. There's really only two business reasons for being in a trade. There's no supply, so we're going to buy some and we'll be the supplier. Or there's too much supply, so we're going to short some, they're going to put it on sale and we're going to cover. Right? Right here, see how it's kind of perched on top of VWAP? Candles are getting smaller. It's a little slow, right? So let's see what happens in 5 minutes when we open. Go take a look at what's going on in the world of equities. Microsoft 376, Nvidia 177, Apple 256, Tesla 360. All of these stocks have inventory above us, right? You know, every single one of these deals, you've got inventory trapped long above, right? So we're in that springtime. Think of this as spring cleaning, right? AMD's just going back and forth between 199 and 225, right? Google inventory above, right? Even Goldman has inventory above, right? Everything has inventory above us. Meta, inventory above. You guys, if you don't know what inventory above means, it means that we've put people in the stock at higher price and they're trapped in it. So look, everybody over 400, right, trapped long, right? Even now, Nvidia, all of that inventory is above 180. I'll take a look at Nike. I don't have a chart on it. I've never looked at that stock. It's NKE, right? Oh, pretty simple. Inventory above. The whole world is trapped long above 52 in Nike. It ain't going anywhere. Right? It's not going anywhere. Which is good. Maybe it'll put his shoes on sale. Palantir, inventory above. There's old Tesla. Right? But that's what markets do, right? You get cheap inventory, you go distribute, then you put it on sale. Right? Seller at 27. Let's go back. So right now we're in spring cleaning, folks. Morning to the folks who are joining us on YouTube. Thanks for coming back. We have singles in the overnight? Oh, yeah, we do. So that's when we opened. We opened down, right? I mean, we closed all the way up at 66.24. Sunday night, we opened here at 65.90. Dropped in to the Thursday singles, did a little bit of short covering, right? And then we took that R high. We took the open of the overnight. We trapped people short underneath 65.90. So that'll be a juicy level if we can get down there. Right? Let's see what happens. Take it nice and slow, my friends. Remember, the week is just starting. Don't be overly ambitious. Right? I always think of new markets or a new week. It's also a new month. I really like letting the large traders go and show us where the buying is, where the sellers are. Right? The large traders, the smart money, new quarter too. Thank you, TBD. Right? I want to watch this reaction at 18 where VWAP is. What I'd like is for it to come up into the 2025s, right? And then hit the sell, right? And if that seller, now, didn't work, right? I wanted to short 26, 27, but I hesitated, and a good thing I did because I would have had my ass handed to me. So there are bids at the open, right? Open straight up, big candle, right? Let's see if we correct inventory lower now. Right? We jammed all these people at 66.29.30. So if you're short off the 30s and the 32s, I'd put bids underneath 26.27. Let's see. Big sellers up here at 36. There's that seller, 36, just like we said they'd be there. Right? That's the beautiful thing about these markets. They're beautifully constructed. Now, if you're not fast off the get-go, don't worry. Right? Trading the open, especially in times of uncertainty, let's call it uncertainty. The order flow is going to be a little choppy, right? Can we use the look below as a candle pattern as well per minute? Oh, no, no. You don't want to do that, Stuart. You really want to use the cost basis zones. When your level of skill, right? Oh, what did I short? I'm short 30. I'm flat. Just a couple of micros, right? And I'm just going to trade micros and be a piker. until I get my health back. SpaceX valuation is $2 trillion. Woof! Yowza. That's a lot of cabbage, AO. I haven't read the S1 for SpaceX. There's a big move. There's a big sort of a balance that we've got here. Anybody read the S1 for SpaceX? That's our sort of box right now. We take out that 36 seller. We're going to take all of this 24, 36 inventory, and we'll sell it at 39, 44, and 49. All right, let's see where do we get bids. A lot of times when markets do that back and forth off the open, when they open, right, and they do this kind of thing, it does trap a lot of people short. My thing is, if it can't get under VWAP, be careful on the short side. Oh, anything is possible, AO. Haven't you ever worked in corporate finance? Corporate finance doesn't really take into account the real world when it comes to valuation. The higher you value it, the more people want to buy it, right? It's a $2 trillion company. Right? Remember, when a company wants to go public, right? You want to beat the drums to bring the retail in. You want to get people excited. This is going to be the largest public offering since US Steel. Oh, if JP Morgan was alive now, he'd be running the book. If we take out Thursday's high, you'll be looking for 66.48 and a half. Did I write cyst basis? So much for auto spell. Cost basis. Right. Remember, pre-IPO is let's get in as many suckers to buy the stock as we can. We want people lining up to buy the stock. Just like an iPod. We want them sleeping up overnight. There's that seller at 36 again. We poked our head over it for about 20 seconds and right back down. Right? We want people lining up to buy the IPO. You want it oversubscribed. Right? Right back down to cost basis. Now, have we suckered enough people on these up and down moves that we can actually get underneath VWAP? Nice, nice. Well done, Stuart. Well done. That's why I like to let a stock IPO, let the insiders sell the crap out of it. Like PLTR was a great example. They sold the holy living shit out of that stock. All the way down to $5. Now, if we take out the 19s, let's see if we get continuation. I'm going to short 19, 19 and a quarter, 19 and a half. My stop is going to be 21 because I got to let it percolate. I'm going to put some 17 and 18 bids in there. I might get stopped out on this. I'm stopped out. Right, I was too early. So that bid is still there. Right, so what did I spend? $15? I spent 15 bucks finding out that the bid was under 19. That's okay. That's perfectly okay. Now let's see if that seller at 26 is still there. Watch that area. It is. It's choppy and it's a little fast. Let's see if we can get under VWAP. There's bids at 20 and 3/4 right now, so be careful on the short side. Right? I don't like shorting right at VWAP. It's like trying to grab an alligator by the tail. Yeah, see, it's always tricky under VWAP to short this thing. So I'd like a look below and look above and fail of 36 again. I'll let them play with this. Those valuations are really, the company's always going to go with the investment bank that comes up with the biggest valuation, right? Like, I mean, who's the book runner on SpaceX? Goldman? I would imagine it's Goldman. Bit of a seller at 29 and a half. Do I trust them? Mm, no A plus setups for me here, folks, just yet. There we go. Make sure if you're short, put your bids in. Do not wait for an invitation. Don't wait for an invitation. Yeah, Howard, just chill, brother. Right? I know you're waiting for an edge. They're not giving you an edge right now. And this is how they get you. Right? Because when the market's not at an edge, everyone's like, come on, I'm ready to trade. I'm ready to make money. I'll just take the trade anyway. Right? And that's how they get you. Because they make you sidestep your business plan. Right? It's like, when you get into a fight with someone, if you get them angry, they're just going to start throwing haymakers, right? And then you just pick them apart, right? So don't be that person, right? If it's not at an edge, if you can't find an edge, just relax, right? There's a lot of time in your day now. Howard, it's nighttime for you, right? So, you know, if you put in a full day at work too, you got to remember that, hey, I might be a little tired, right? The thing, how they get us is they make us forget our business plan, get wrapped up in it because we're waiting and we're waiting, and it's bouncing around. It's trying to suck you in, you know. It's like that pretty girl in the nightclub. She's giving you the eye, and then you start following her down that dark alley, and the next morning you wake up in a bathtub full of ice, missing a kidney, right? Don't fall for it. Wait for your edge. Wait for your edge, my friends. I'm seeing the offer lift. What I'm waiting for is that 36. That's Vancouver, Stuart. That's definitely Vancouver. Many a man has woken up missing a kidney in that town. See that right now you're like, nah, I'm not gonna play. You right? I'm not gonna play. Right? I want to see if it goes up above 36 and sticks and goes, or if it goes above 36 and comes back, because I know that seller is waiting. I know they're waiting. There. Let's see what happens. Seller's still at 36. I've seen that documentary. Yeah, I worked at nightclubs in the early 90s. So, unfortunately, there you go. Now, if you're short 34, 35, 33, your stop is 36. Put some bids under 32 and see if you can get some product. If you can't, then you can go and cover, right? Wait for your trade, my friends. Wait. There, see? Now watch the offer. If the offer can't get over 34, you're all right, because they're going to start putting it on sale. Here we go. Ah, come on. Show yourself, you rat bastard. Where are you? Where are you? I know you're there. There's that seller. 33 and 3/4. Playing possum. Eventually you're going to have some competition. There you go. See, and that's what you're waiting for. You want to short the 34s, 35s, stop 36, bid 29 and a half, 29 and 3/4. It's a distribution. Definitely a distribution story, right? They're going to squeeze them for as long as they can, right? When you have shorts trapped, you're going to milk that for as long as you can so you can distribute above. You're going to sell it down to where the shorts are trapped, which is right now 66.20. As soon as you get to 66.20, the machines will stop selling because those big bids will start coming in, right? You lift the offer, make them chase and you can sell more. Eventually, you're going to get to an area like the 66.36 where everybody, his dog, his parrot, his cat, they're all going to sell. If we can hold price above 32, it'll bring in some suckers who will be willing to pay 36, 37, 38, 39. But if we can't do that, the market will go back down. This is the kind of, that's what you should be thinking about right now, right? So always think, right? There we go. See? They're the suckers. Now, can we take out that 42 candle, which is up here? If we can hold price over 36, it's going to bring in buying. And how many people are going to be short under 36 who didn't cover the 29s? They're going to be bid to cover 36, 35. And we'll be able to milk, we'll have a couple of sets of shorts, right? You'll have the lightest set of shorts here. The first set is trapped here. The second set is trapped here. And then up you go. Okay? And if we get enough people trapped short, look, we'll take out that 43 and hit that previous day high. It's really simple. The thing is, we're not used to thinking about things that way because everyone talks about all these esoteric, crappy things in these markets. Right now, if you're shorting again, I would wait for this candle to close. Right? Which means you might miss the short. But if you are a gun to your head shorter right now and you're shorting 34, just put your stop at 36 and put some 32, 31 bids in. And if there you go. There's the 32s. And if we start getting back over 36, cut your risk. Right? Once you get the position underneath you, right? Because most people go position long, right? And if you get enough people short in this area, you'll start getting those big green candles. But we have to hold 36. If we can't hold 36, we're going to come trade down to the 30s again. These markets are very, 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 how do I say? They're very exact, even when they're volatile. Even when these markets are volatile. Nice work, Mike. Nice work. Hey, that's great, brother. Beautifully done. You got a payout? Beautiful. Ah, that makes. You know what? Every time a retail trader gets a payout, a market maker gets his wings. It's beautiful. Every time a retail trader makes money, a market maker gets his wings, which means you've saved one market maker from going to hell. 2.5 years? That's not bad. That's not bad. It does take time. You know, that's what nobody tells anybody in this business. It does take time. You know, it's a very simple business, but it sure as hell ain't easy. You know, because just when you start trading well, some idiot drops a bomb or something happens or somebody changes something, and then we have to change and adapt. And the market's everything changes. And what you were doing last week doesn't work on Monday, which is enough to make a guy pull his hair out. You know, that's the problem with this business is the adapting to change, which is really, really hard to do. Now, let's see if that 36 seller is still there. They're screwing with us here. He's still there, or she, or they. There they are. Exactly. Hey, Pollux, how you doing? It takes time. Even myself as an institutional trader, going from institution to retail, it took years for me. First of all, it took discipline. Jesus, discipline was the hardest thing. I mean, I just sell stock and then we go to the bar, right? Now we got to journal trades, have setups. I remember when I first started retail trading, everyone would go, JJ, what's your favorite setup? And I would say the FBI, the undercover FBI agent posing as a fund manager. That's my favorite setup. And they'd be like, huh? What? Right? It was my favorite setup. That's how they get them all the time, right? FBI agent posing as a fund manager. Some stupid promoter says the wrong thing. Next thing you know, they're hauling them off to jail. Right? The trade setup there. See that candle that we just are in now? That's the shorts came into cover. Those are the shorts that are trapped under 36, and they went, uh-oh, SpaghettiOs, time to cover. They went to buy at 39. There wasn't enough inventory up to 42. So the only thing that's holding the pot on the lid on this thing is that 42 seller. There's news in 9. Thanks, Alexander. So, pardon me for being naive. Is there a deadline tomorrow for this deadline delivery thing? 8 p.m. Eastern time? Okay, thanks, all right. Jeez, okay. So then, everybody trading Globex, be careful. Was it? I don't know if it's AM or PM. Anyway, let's just be careful the whole day. Oh, craziness. No trade for me right now, folks. They're just playing with us here. They sell hard at 42. They stop selling at 36. So there again, you have that little balance zone, right? You got that here. That's just back and forth, back and forth. If we break that, I'd be looking for a break of 49 to the upside. Let's go take a look at the upper stops. Just in case, right? Just in case they get frisky. If we take out yesterday's high, you're looking for 48.5, then 51.25, and then we have stops at 53 and 54 from April 1st. And then we have a stop up here at 66.61 from March, and then here we've got stops at 70. So there's the structure that we're looking at. Oh, you know what I didn't think of? Doi, JJ, Jesus. What I didn't think of is if you knew that there's going to be some kind of a deadline and you were long size, think about it, my friends. If you were long size here over the last couple of days, think about this, right? I want you to think like a villain now. If you were long size here and you knew there's a deadline tomorrow, wouldn't you want to get rid of some of this? Wouldn't you want to try and get rid of as much of this as you can and turn that into cash before the news? That could be why we're seeing bids. Let's see. Mark it up and blow it out, right? But that seller at 42 is pretty, it's those 42 sellers are they're sticky right now. So let's see. Right? For the politicians, it's poker. For us, it's inventory. There's that 36 bid. Let's see if we can take that point of control from 30 and throw it up here to 36. So what, 1,981 contracts? Let's see. Give it some time. Oh, there's another press conference, 1 o'clock? Yeah, I think after this session, I just got to go walk on the treadmill. Like, get into the least amount of trouble I can. Oh. All right, can we creep the 42s now? Come on. Not just yet. See, you can see that there are sellers that are competing at 42 and pushing price down, but they're not aggressive. So if we accept over 42, be careful shorting. Right? So watch 42, and this way of trading is the simplest way to do it. It's not easy, but it is simple because you know that if there's a seller at 42 and you clear out the 42s, then you're going to go to the next area where the sellers were, right? That's what we used to do in the old penny stock days and even in NASDAQ days, right? We'd watch that offer, like say if Citadel was $5 offered and the guy's there like a bad cold. Now we're going to start running some stops. They're going to sell into it. Here's the backfill. Watch 42. Watch if it bids 42. If it bids 42 and the offer starts moving up, we'll take another run at the previous day high. Otherwise, this is a look above and fail of 44.5, the previous day high, and we'll come back down into the 39, 38, 36 area. Right? After a stop run, or what you guys call a breakout, we call this a stop run. It's going to backfill. Where it backfills is we're looking to see where it finds the bid, because it's going to find the bid and then do this. If there is no bid, it'll come right back to that 36 level. Watch as it gets up to 42. Do they step in and start selling again? Or do they lift to 42 quarter, 42 half, 43? The next period's going to open here in 55 seconds. So let's see what happens. For some reason, I've got short bias going in my head. But if we can't stay under 42, then my bias is wrong, at least for the time being. Right? We need sellers to be short biased. I can be short, see? I can be short biased all I like, right? But the market doesn't care about my bias, right? The market doesn't give two you know what's about my bias, right? I'm short biased, but we're holding 42 and the offer is lifting to 45, 46, 47, right? There's, see, there's that 42 again. Watch out. If it's a little too choppy for you, just relax. Eesh, what a dog's breakfast this is. And that's 4 times cost basis. Now we are in 8 times cost basis. So look above and fail of the overnight high. Hit that 61 stop to the tick. Nice. Yeah, it's not exactly the easiest trade right here. Right? So if you are shorting under 49, you want to have bids at 41, 42, 43. If there's no bid at 44, then we'll come back down into the previous day's range. It's not an easy trade. And that's okay. Because it's Monday and we've got a long week ahead of us, my friends. Got a long week ahead. Now let's see what happens when the next candle opens. If you're shorting under, like I'm short 42.83. Not the greatest short. I screwed that up. Good thing I'm trading micros. And if it takes out the previous day high again, I'm going to flatten. My stop is right here. I'm flat. I ate it on that one. That's okay. Screwed up that execution. Let's see if we can stay above the previous day high. If you're using the previous day high as a spot to go long, that 48.49 is going to be where you're going to be a seller. But if it comes underneath the previous day high, be careful. Right? These are big candles. It is choppy. Right? It's okay to be wrong, folks. It's okay to be wrong. Just admit you're wrong quickly. The faster you admit you're wrong, the less painful it's going to be for you financially, right? So I was just short, just a scooch under 43. And as soon as it took out the previous day high, I was like, thank you, I'm gone, right? That's the trade I wanted. That's what I wanted. I wanted 43 down to 39. But I was too slow. That's okay. I was early. Oh, it's going to be a long year, Alexander. Might be a long presidency. At the end of this 4-year term, we might all have gray hair, if we have hair at all. All right. That's pretty much the end of that distribution. Looking for that seller at 36. Right? If we can't get under 36, you can pretty much short this thing down to around 28, 27. I'm watching 36. Short 32, covering 28. Flat. There we go. Made it back. And there we are, 26, 27. Right, so that distribution, this is the thing, and you saw me get into it too early, right? That I had to wait, and then I had to take the trade and actually execute lower to get that fill, to get that, and that's okay. You don't have to get the top. Just get in, get out. The thing about this market is, and I cannot stress this enough, is to really, really admit you're wrong quickly. The more stubborn you are in this market, oi, ugh, it's painful. Right? Just take it easy. Don't overdo it. Everything will be fine. Yeah, some people love the pain when they're young, but take 34 years of pain after a while, you don't want to take pain anymore. You just want to make your money and get out, Derek. You must be young. I've been doing this for 34 years, so after a while, you're like, yeah, I'll let the young guys, if you guys want to, go into the torture chamber. It's funny, we used to have this one broker, every time he'd don't answer the phone, he'd go, torture chamber. uh, Hit VWAP, found some bids back up to 29. You're 40? Oh, okay. Well, you probably haven't had your first heart attack yet. Give it a couple of years. If you avoid pain, then you can avoid heart attacks. And the shorts are covering here between 26, 27, 28, 29. That's why you want to do smart business, Stuart. right? You know, it's all fun and games until you're clutching your chest at 3 in the morning. And folks, please do check out our trading university. I'll put our links in here. Yeah. And then our room is tradingsyndicate.org. I'm back in there this week. Ah, you guys in your reversals. That's good. 3 p.m. reversal. Basically means sale. Nice. Right. We are having a free trial. So come into the room. It's free for 3 days. At worst case, you're going to pay 19 bucks. So it's not going to kill you. And we will help you figure out how to make money, how to make a living, how to manage your risk, how not to have a heart attack, right? That's the goal, right? How to keep your hair. And we're just kind of bouncing back and forth. And I think I'm going to shut it down here a little bit, save my voice. I can feel my voice starting to go. I want to thank you folks for being with us. We'll be back. I'll be here again 7:30 in the morning UK time, which is 2:30 in the morning New York time for you insomniacs. I appreciate all the well wishes from everyone. Thank you so much. Please be careful out there. And if you need me, reach out. And once again, for my one-on-one students, I'll be back at it tomorrow, hopefully. So if you want to schedule stuff, I'll be around. Have a wonderful day. Thanks, everyone. Be safe out there, and we will see you tomorrow morning. Thanks, brother. It's good to be back. Hey, Josh. Thank you. All right. Have a great morning. Bye for now.